I would appreciate that. Great. So thank you everyone for joining us. I appreciate it. My name is Alex Bielefeld. I am a senior researcher at the Mandela Institute. And today we're here for a webinar, which is the first in a series of 4, which is a partnership, which is in partnership with UNCITRAL and the inaugural UNCITRAL Days in Africa initiative. And I believe, so we have with us today Anna Joubin-Bret, and she's the secretary at UNCITRAL, and she will speak to that a little bit more when I hand over to her later. But I just wanted to sort of set the scene for us a little bit from a Mandela Institute perspective. So the theme of this year's UNCITRAL Days in Africa initiative is basically harmonization and modernization of laws in Africa against the backdrop of the Continental Free Trade Area. So, of course, at the Mandela Institute, we've been keenly following what's been happening with the Continental Free Trade Area, and we're quite excited for it. We think it can be quite a game changer if it's implemented under the right conditions for the continent. And one of our focuses at the Mandela Institute of recent times really has been on economic inequality and inclusion, as well as financial inclusion to a degree. So what we're really interested in looking at the Mandela Institute is this idea of an economically inclusive AfCFTA. That sort of drives the starting point for today's webinar as well, is this idea of making the AfCFTA something which is economically inclusive. And we'll be looking at the idea of leveraging both technology and the harmonization of laws to improve one of the sort of main challenges that small businesses tend to face on the African continent, which is access to finance, access to credit, if we're using UNCITRAL language. So that's sort of generally where we're coming from, and that's sort of generally the idea behind today's theme or a specific topic. So that's the first webinar. We'll be having 3 more, so do keep an eye out for those. They will speak to other areas of interest. Yeah, I think let me not say too much more other than I'm grateful to our speakers today. So just as an agenda, briefly, I'll hand over to Anna in a moment, and then she will have some opening remarks, after which I will hand over to Mr. Kennedy Letlhogela, who is a regional integration expert and development scholar, and he will speak to why it's important for us to consider the needs of MSMEs in the context of the African Continental Free Trade Area. I just sort of do some scene setting for us and sort of speak to why this issue is of such importance on the African continent. We'll then hand over to Ms. Monica Canafoglia, who is from UNCITRAL. She will speak to some of the work that UNCITRAL has done on MSMEs and access to credit. I will then hand over to Mr. Spyridon Bazinas, who is from the Kozolchyk National Law Center. I hope I'm not butchering the pronunciation on anything too badly there, Spiros. Spiros is also a former secretary of Working Group 6 at UNCITRAL, I believe, if I'm not mistaken. So it's great to have you. Spiros will speak to a specific aspect of UNCITRAL's work on secure transactions, I believe. And then we'll move over to Vera Neugebauer, right? Is that correct? Am I butchering it too? I'm sorry. Vera Neugebauer, who's from Sendfree, and she'll touch on digital platforms and how they facilitate access to credit for small businesses. And then I'll just wrap things up after all of that. But before that, we will also have a Q&A to the degree that there is time to do so. So I'm going to hand over to Anna, and then we'll take it from there. Thank you very much.
Thank you very much, Alexander, for this kind introduction, and most importantly, for having agreed to pick up the challenge of hosting one of the first events of our UNCITRAL Days for Africa. I would like to thank the Mandela Institute for this partnership with us, and also thank all the speakers and welcome all the speakers and the participants in this session. It's really a great honor and pleasure for us to be partnering with the Mandela Institute of the Wits University in South Africa. So just very briefly, because I know you're more interested in access to credit and leveraging technology for MSMEs than to hearing about the UNCITRAL Africa Days initiative. But just to put it in the context, it's one of our flagship events. It's an annual series that we are co-hosting with universities and institutions of higher learning. It's meant to celebrate the establishment of UNCITRAL many years ago in 1966. And we are using these events to promote awareness, to foster research and discussion of UNCITRAL texts and topics with young legal scholars, students, but also academics and sometimes also government officials. And really the idea is to engage with the next generation of legal thinkers and policymakers. And this is, of course, with at the back of our minds, the expectation to see all these participants joining and contributing to the work of UNCITRAL. So just very briefly about UNCITRAL, because it may not be that well known to you. It's one of the two legislative bodies of the United Nations General Assembly. And we have the International Law Commission that works on public international law, and we have a focus on private and more particularly business and commercial law. So, and of course, harmonization and modernization is at the heart of our mandate and very much in our DNA. So we had this initiative of the UNCITRAL Days already since 2014 in Asia and the Pacific. We have launched them now also for Latin America and the Caribbean. And 2 years ago, our commission session requested that we also establish this series of UNCITRAL Days for Africa. We hosted co-hosted with the Ministry of Foreign Affairs of Ghana, a launching event in May of this year. And we got support also from the European Union to bring in and gather a number of institutions of higher learning from the region. And most importantly, to also liaise with the AfCFTA Secretariat and to also research and investigate at our level how best we can contribute with our harmonization efforts that are more at the infrastructure, legal infrastructure level to the success of the AfCFTA, which as Professor Dr. Bielefeld was saying is really a major opportunity and also a challenge for the African continent. So I'm delighted by this first event with the Mandela Institute that has selected a very important and topical issue for discussion. I'm saying important because we have a working group currently deliberating and working on this very topic, which is the harmonization of laws to improve MSMEs' access to credit. We also have a working group which is looking into leveraging technology for international trade law. And so the two together are really going to be very interesting from our point of view, from the substantive discussions that it will hopefully generate with you. So just to, without further taking further more time from you and from the topic, Once again, many thanks to the Mandela Institute, to Professor Dr. Bedefeld, to the speakers. I leave you in the good and able hands of Monica Canafoglia, who is the secretary of the working group that is working specifically on access to credit for MSMEs, but also my former colleague, Spyros, who will be talking about, from his expertise and experience, more about secure transactions and the secure transactions framework that UNCITRAL has developed over the years. And my colleague, Mirjana Benaj, who is joining us also, and who is the coordinator of the Africa Days, the UNCITRAL Days for Africa. So with this, I leave you to join the discussions. I thank you again very much for this opportunity. I look forward to the next editions of the next events with the Mandela Institute, and including one in person at the end of the month of November. So I'm getting ready to travel to the sun, leaving gray and foggy Vienna behind, but sending nevertheless warm greetings to all. Thank you very much. Over to you, Alex.
Thank you very much, Anna. I appreciate that. Yeah, thank you very much for setting the scene, and also for joining us and for that introduction. I think that places things in context very nicely for us. So I'm going to hand over immediately to Mr. Kennedy Letlhogela, who is going to speak to us about the importance of considering the needs of MSMEs within the AfCFTA context. Kennedy, over to you, sir.
Thank you so much, Alexandra. Just please quickly confirm if you can see me.
Yes.
Okay.
We can see you. We can hear you.
All right. Let me greet everyone. I think it's a good afternoon here on this side of the earth. And to everyone really who's tuned in, to our guests, thank you so much for making the time, and for the great collaboration between UNCITRAL and the Mandela Institute. I think it's very important for us to be having these conversations, and it really shows the kind of steps we really are taking towards ensuring a more efficient implementation of what is considered to be really Africa's greatest initiative out of poverty, and to ensure socio-economic development. My name is Kennedy Letlhogela, and as Alexandra had already said, I am a development scholar. I'm currently taking a postgrad in development studies, focused specifically on women in trade and how to ensure that they are women are included, or women in the informal sector are more included in regulatory frameworks and policies. I am also a development practitioner, having spent my infant 4-year career in development, advising state actors, our governments, on regional integration, and I am with the German Development Corporation. I sit here in cloudy Botswana, which we are very grateful for. It does get a bit sunny and hot here. I thought today my discussion would be in two folds, perhaps to give the status of really where we are when we talk about the African Continental Free Trade Agreement, and to really zoom into what we consider, after the 4 years, some of the monumental steps that have been taken. So as we've already said, central to the establishment of the AfCFTA is to raise the standard of living of the people of Africa. The AfCFTA is a vehicle facilitating the economic liberation of the continent and ensuring that Africans take full advantage of the trade potential on the continent to create jobs, increase income, and provide for the lives of every African, while also positioning the continent to be a force in the global trade. If successful, the agreement is envisaged to, through a single market, provide a market of about 1.3 billion people, making it the world's largest market by member states after the World Trade Organization. A report by the World Bank anticipates that the AfCFTA could lift about 30 million Africans out of extreme poverty, boost incomes of nearly 70 million people, and generate an income of about 450 billion US dollars in the next, between now and the year 2035. The agreement was signed on the 21st of March in 2018 in Kigali, Rwanda, and came into force on the 30th of May 2019. The AfCFTA has already under its belt a few protocols, being protocol on trading goods, protocol on trade and services, protocol on rules and procedures on the settlement of disputes, protocol on investment, protocol on intellectual property rights, and the protocol on competition, protocol on digital trade, and the protocol on women and youth and trade. And the start of trading under this agreement began on the 1st of January in 2021. So far, 55 member states have signed, and as of today, the 1st of November 2020, 44 out of 55 member states have deposited their instruments for ratification within the African Union Commission. The AfCFTA agreement, however, becomes an overly ambitious tool if we play blindness to the actual players of its success. And this is really the micro, small, and medium-sized enterprises, which about 90% of African businesses fall into this category, accounting for at least half of the total employment. Such small, formal, and informal firms conduct a sizable share of Africa's regional trade. Now, I'm going to zoom into the individual role that state players, being governments, are supposed to be playing in ensuring that there is somewhat a level of inclusiveness and a conducive environment that needs to be developed for these MSMEs to thrive under the AfCFTA. And this discussion will be divided into two, being how governments could play an even bigger role in capacitating MSMEs, and how they could further on ensure that they are providing a conducive environment for the growth of MSMEs through policy and regulatory framework revision. So in terms of capacity building of MSMEs, the financial systems in African member states have historically struggled to effectively mobilize funds and allocate capital. This is largely pinned to the lack of capacity around SMEs and in-depth informal sector, which contributes to a larger percentage of this group of businesses in Africa. In fact, the World Bank Enterprise Survey suggests that one of the factors that contribute to the growing financial gap and high rejection of applications submitted by SMEs operating within Africa is that SMEs are far less able to meet collateral requirements and other necessary requirements for accessing investment funding. While that is typically a problem that is directly affecting these SMEs, another twofold issue that comes up is the actual financial and monetary regulatory frameworks that govern the way in which businesses are done in these member states. Now, these two have greatly ensured that there is lack of capacity in terms of member states, in terms of SMEs being able to apply or access finance and venture capitalism, for instance. Now, what needs to happen in terms of capacity building is that governments need to understand that for industrialization to occur, the sole actors of the industrialization agenda in many of our African, in fact, all of our African states, relies on how we incubate and ensure that regulatory policies are aimed at capacitating the SMEs to be able to access finance within our individual countries and beyond. This could be done and should be done through ensuring that we are resource mobilizing on behalf of SMEs internally and outward. And this also goes a step further in terms of what initiatives are we coming up with to ensure that there is adequate capacity building. And capacity building in Africa for SMEs could be as small as financial literacy, technological advancement, and how some businesses are even not registered. This creates a very great risk for how these companies are going to operate in such a huge platform, where there is obviously an inadequacy as to how other countries have been able to develop, but to what extent we're also opening up Africa to the outside world, and also companies that had set up prior being our multinational companies. So it is on the sole purpose of governments to ensure that they are playing an even greater role in building initiatives that are to capacitate these businesses, and to also ensure that this is met by revising financial monetary regulations and also policies that ensure that organizations outside Africa are seeing Africa as a viable market to invest. Now, moving on to how to produce, or rather how to provide a conducive environment for SMEs through policy and regulatory framework revision. Trade in itself is not, trade agreements are not to be achieved in silos, particularly because they have an interdependency on how other policies within states are formulated. For instance, a trade agreement could not essentially work if there are no statutory and regulatory frameworks that ensure that industrialization and manufacturing in a country are able to happen at a point where SMEs are incubated and able to participate or perform globally. Therefore, it is the sole purpose of our state actors today to be ensuring that there is a level of policy revision and alignment to the aspirations of the AfCFTA to actually see success. This will include ensuring that we are revising our infrastructure policies to ensure that there is connectivity for trade to happen. For you to be able to access another country, you have to have developed roads, you have to have infrastructure, you have to have connectivity. Technological advancement would be at the core of how we ensure that these policies are really shaped in a way that the ecosystem finally produces an environment where the AfCFTA can work for SMEs in individual countries. There is certainly a lack, an advancement in the aspirations that we are seeing in governments. However, this could be more achieved through using the regional economic communities that we sit in as individual continental countries within Africa, to ensure that we are coming up with harmonized policies that are aligned to the aspirations of what trade needs to look like. So the role of individual governments and state actors really goes far and beyond just signing and depositing instruments for ratification. But we need to ensure that while we are doing so and creating such a glamorous policy framework at a higher level, we've also ensured that our countries themselves are well equipped to ensure that they're responding to the needs of a market of 1.3 billion people. And that is the sole purpose of what our governments should now be looking at, ensuring that they are capacitating, incubating for growth MSMEs, and ensuring that when this platform is implemented, it actually benefits the actual beneficiaries that are targeted. Thank you.
Thank you very much, Kennedy. That was really excellent, and I think that sets the scene very nicely. And as a trade lawyer, that doesn't tend to deal with the kind of texts that UNCITRAL works with, and sort of is more concerned with the sort of concerns of the AfCFTA, generally speaking, so sort of non-discrimination rules and these sorts of things. I think you made an excellent point there about we can't negotiate these sorts of agreements in silos, you know. So I think that's why an event like this one is important for us to sort of try and see the linkages between these different areas that we might, you know, see as distinct, but as as becomes very clear very quickly, is that they're very clearly strongly related, and that for one to work, the other needs to work, and they need to speak to one another, and so forth. So I think that sort of sets up the conversation nicely for Ms. Monica Canafoglia to come in and speak about UNCITRAL's work on this issue of access to credit. So Monica, I'm going to hand over to you.
Thank you, Alex, and thank you for organizing these Africa Days at the Mandela Institute. To you, to your colleagues who have worked behind the scenes, and also thanks to the previous speaker who has kind of set the scene for me. Actually, it may be that a few things that you've heard from Mr. Kennedy, you will hear from me again. As our secretary, as our director, Ms. Joubin-Bret, who's also the secretary of UNCITRAL, said in her opening remarks, UNCITRAL deals with international trade law, with commercial law. So we're moving a little bit outside here the realm of policies, and we are more into contract law and commercial law issues. Nevertheless, as the previous speaker has said, as highlighted, there are issues in the particularly relevant in terms of contract and commercial law that kind of hinder the growth and the sustainability of MSMEs. And we were talking about formalization, so business registration and also business incorporation. We're talking about when it comes to access to credit, for example, the use of collateral, the use of personal guarantees. They're all elements that can be perceived that they are actually building blocks for MSMEs. In terms of UNCITRAL work on MSMEs, this work started, first of all, a step back. UNCITRAL over the years has prepared many legislative texts dealing with commercial arbitration, international sales of goods, secure transactions, insolvency. Those texts are per se applicable to all sorts of commercial entities, regardless of their size and their legal form, so also MSMEs. However, starting in 2013, UNCITRAL has decided to focus specifically on certain aspects of the legal framework that are particularly relevant for micro, small, and medium-sized enterprises, and has prepared and has produced three texts, and one is under development, specifically focusing on MSMEs. Two of those texts, one text is about simplifying business registration procedures. Another text is about simplifying incorporation. A third text is about simplifying insolvency procedures for micro and small businesses. And the fourth one, the one that I'm kind of introducing to you now, is about access to credit, facilitating access to credit for MSMEs. And this fourth text, that is it's a guide for states to help states improve their legal framework on access to credit for MSMEs, is currently being discussed. And it will be kind of the closing the loop of the text that UNCITRAL has prepared, specifically addressing MSMEs. Access to finance first is important and is crucial for MSMEs. And it's important because without access to finance, which includes access to credit, access to savings, to insurance products, to payment, then MSMEs cannot cannot be established, cannot operate, cannot be sustainable. Now, the World Bank, for example, has noted that limited access to finance is the second most cited obstacles from small businesses in terms of challenges, especially in emerging markets. The first one is, if I'm correct, lack of energy, lack of access to energy, or weak access to energy infrastructure. Access to credit is a component of access to finance, and is actually what is the focus of UNCITRAL work. So UNCITRAL work is about facilitating access to credit, and access to credit is can be obtained, is determined by several factors, like the age of the entrepreneur, the gender of the entrepreneur, the operation of personal and business bank accounts, and the availability of business records, and also the availability of collateral, for example. What are the issues for the MSMEs? Well, MSMEs have a big difficulty in accessing credit through regulated financial institutions. And here you have heard from the previous speaker that one of the issues is their lack of collateral. And my former colleague, Spyridon, Mr. Spyridon Bazinas, will further elaborate on that. And also, it may be an issue, the possibility to provide and to issue personal guarantees for facilitating access to credit. So the point is that many times small businesses fail to meet the lending requirements of the regulated financial institutions, and that is a result for many MSMEs to resort to informal way of financing. For example, microfinance institutions that in several countries are not regulated, but also family and friends that play a major role in supporting MSMEs. But also when MSMEs kind of meet the criteria to access formal financial institutions, then sometimes financial institutions are still reluctant to issue loans because to micro small enterprises, because the loans are too small to be profitable for the financial institutions. So this is another reason that is determining the capability and the ability of MSMEs to get money, to get credit. And this is also another element that often prompts MSMEs to go to the informal sources of finance. This difference between the supply, the current supply of credit to small businesses, and the demand is called the finance gap, sometimes also the financial gap. Now, the International Finance Corporation has estimated that this finance gap, so this unmet demand for financing from formal MSMEs, is about $5.2 trillion US. Now, according to the IFC, there is another finance gap for informal MSMEs that are $2.9 trillion US. So, which are quite huge figures. And this finance gap, where is this finance gap hitting the most? Well, the finance gap is usually greater for women-run MSMEs than for men. And that's because sometimes there are cultural biases, there are economic, social, legal constraints for women. For example, in some countries, interest rates are too high for women compared to their type of the business they are engaging in, and sometimes they don't have what is called reputational collateral to access credit, so they don't have assets, but at least they have a reputation that they can repay the loan. So another reason why they are denied access to formal credit. There have been a number of reforms in many countries, and those to facilitate access to credit for all MSMEs, to tackle the issue of the finance gap, to assist also women-run MSMEs. And for example, if I can list some of those reforms, some of them are hard support policies and regulations that, such as establishing credit guarantee schemes in relation to bank loans, or direct lending programs to MSMEs, or facilitating, for example, the adoption of measures to improve the competition between the domestic financial providers. Other measures, other reforms have in fact focused on soft support policies and regulations, including, for example, support the capacity building for MSMEs. So here again, an issue that has already been highlighted by my previous colleague. So it's the addressing the low financial literacy of MSMEs. Several programs several states have worked on these aspects, and not only addressing the low financial literacy of MSMEs with specific programs, but also addressing their maybe weak skills in managing their businesses, in finding appropriate operational solutions that consent to the business to expand. Many other efforts at international level, global level, but also at country level in recent years have focus on the role of digital financial services, platform-based lending, or other fintechs applications. And I assume here that you will hear much more from the last speaker of the day. And the G20, the group of 20, has recognized that the digitalization of financial services is a potential game changer because for small businesses, because they can facilitate access to credit with less formal requirement and in a speedier way. And for example, the United Nations Task Force on Digital Financing for the Sustainable Development Goals has recommended legal reforms to support the use of digital financial services. For example, the task force has encouraged the governments to adopt the laws that define the legal nature of the digital assets, or to improve their private law regimes governing the relations between the parties involved in the transactions through the digital platforms. Then there have been many other initiatives at global level and regional and national level to encourage the adoption of modern secure transactions regimes that can greatly facilitate access to credit for small businesses. And here you will hear from my former colleague much more on this topic, on these aspects. Why I'm presenting all these examples? Because the the draft guide that the UNCITRAL is working on to facilitate access to credit for MSMEs is building on all those reforms. He's building on all those best practices and is trying to present them all together in one text to assist the states that want to improve or to modernize or to adopt laws in this area. The guide is based on, particularly based on secure transactions text that UNCITRAL has prepared over the span of 20 years, if I remember correctly, but also deals with other aspects like personal guarantees, like the importance of formalization, so to provide a legal framework that facilitate business registration or business incorporation. But the guide is also aware that especially in an area like access to credit, it is important to have complementarity between legal measures, legal provisions, legal reform, and policy measures and regulatory measures. And for these reasons, it does also address a certain number of reforms that states should adopt in areas like credit guarantees, credit reporting, financial literacies, importance of providing transparency that can help to improve the environment for MSMEs. One aspect that is mentioned in the guide, and that is also explains why today we are talking about, in the webinar today, we're talking about secure transactions and fintech, is that the guide also considers and looks at fintech very briefly, though, because the area of fintech is mainly for an area for regulatory measures. And in this regard, the guide has decided that, of course, being UNCITRAL mandate, a mandate that deals with commercial law, the discussions that we can have in the guide, the issues that we can deal with from a regulatory perspective and policy and institutional perspective are, of course, is of course limited. So while we acknowledge all those other reforms in the guide, so that I have just mentioned, we are mainly discussing and making recommendations to, and UNCITRAL is making recommendations to states in the area that are mainly commercial and contract law. And with that being said, I'm stopping here. I'm concluding here, and I thank you for your attention. And I leave the floor first to Alexander, and then to my colleague, my former colleague, Spyridon, who will actually show you more in detail how secure transactions can leverage MSME's potential. Thank you.
Thank you very much, Monica. That was really excellent. Going to hand over to Spyridon in a moment, but I would be remiss if I didn't point out that oftentimes when you look at conversations in relation to free trade agreements and in the World Trade Organization as well, we sort of talk the talk on MSMEs and speak generally about why it's important, for them to get access to finance, get access to credit. So we cite the same World Bank reports and we cite the same IFC reports and AfCFTA reports, but we don't get at the problem as directly, I don't think, and as concretely as the work of UNCITRAL does. So that's always quite reassuring to me. And with that said, I think we're going to get a little bit more specific still. So I'm going to hand over to Spyridon now, who will speak to us about specific UNCITRAL tool on secured transaction standards and how this can facilitate access to credit for MSMEs. So Spyridon, over to you.
Thank you very much, Alex. I would like to thank the Mandela Institute and the UNCITRAL Secretariat for their kind invitation to participate in this event on Africa Days. Of course, the two institutions were enough for me to feel really honored to participate. Anything that bears the name of Mandela commands respect. And of course, UNCITRAL is a venerable institution respected all around the world. I would like to remember here the friend and lawyer of President Nelson Mandela, George Bizos, whom I had the honor to meet to one of my official visits in Johannesburg, and show that he had a similar demeanor as President Mandela. He was a learned man, but also a modest, a humble man. And I would like also to remember my two former colleagues in UNCITRAL from Africa, Robert Hunja, former dean of the Law School of Lusaka and professor at Cornell University in Ithaca, New York today, and Robert Hunja from Kenya, who left UNCITRAL for the World Bank and then back to Kenya. Now, my task for this short presentation is to say a few words about how secure transactions facilitate access to credit for small and medium-sized enterprises, and also for micro enterprises, although micro enterprises, as Monica said earlier, have the problem of lack of collateral. But there are certain provisions in the UNCITRAL text on secure transactions that facilitate access to credit for small, medium enterprises, and even micro enterprises, and I will focus on those. By way of introductions, just to say that UNCITRAL prepared back in the late 90s a convention on receivables finance, and then prepared a number of texts on secure transactions, the last one being the model law on secure transactions, on which I will focus. Now, any discussion on secure transactions about small and medium-sized enterprises should start with the reference that a law, an efficient law on secure transactions, is a necessary condition, but not a sufficient condition for facilitating access to credit. Necessary because the law must, for example, make it possible for enterprises to use as collateral future receivables or future assets in general that the small enterprises has not acquired yet at the time of the conclusion of the lending agreement, but also the kind of assets like receivables and inventory that normally are available to small enterprises or medium enterprises. And this is important, but it's not sufficient because of a number of reasons. For example, there has to be also a judicial system that facilitates the enforcement of security interests. There have to be also secondary markets for the sale of collateral. The regulatory law must facilitate that lending of banks or other finance institutions on the basis of receivables or inventory. And there are a number of conditions that are outside the law on secure transactions. But still, the law on secure transactions is important. Now, how does the model law of UNCITRAL facilitate access to credit, in particular for MSMEs? First, we should say that secure transactions law does not differentiate and should not differentiate according to the type of borrower or lender. The law should generally be the same, and that's the approach taken both in the model law of UNCITRAL and the draft guide on access to credit for MSMEs, that the basic secured finance law that applies to all enterprises should apply also to MSMEs. However, the model law recognizes that there are some exceptions that should be included in this text. For example, to the extent that there are statutory provisions that limit the use of collateral or the enforceability of security interest should be respected. And that is one of the first provisions in the model law. The model law essentially deals with security interests in movable assets and follows what we consider is generally considered as a modern approach to secured finance, which is to have a functional approach, a comprehensive approach. That is, UNCITRAL realized that one of the main problems of secured finance laws around the world is that there are, in a way, spread all over different types of legislation that has been prepared at different points of time by different people. And therefore, this multiplicity of laws leads to inconsistencies between the laws and to gaps and uncertainty, essentially, which affects the availability of credit, in particular to small and medium-sized enterprises. So the first characteristic of the efficient secure transactions law is that it should be functional. It should cover all interests that fulfill a security role, irrespective of what they are called. For example, the transfer of title for security purposes is treated as a security interest. The outright assignment of receivables for security interest is also treated as a security interest. And the retention of title until the full payment of the price of goods is also treated as a security interest, at least with respect to key provisions of secure transactions law, such as the method for making the security interest effective against third parties. Registration is the main way, and priority, set of priority rules to regulate the priority status of different security interests. So that's the first characteristics, the functional approach of the secure transactions law, which is important because it deals with the multiplicity of laws that creates uncertainty and therefore affects the availability and the cost of credit, in particular to small and medium-sized enterprises. The second characteristic is that the law is comprehensive. That is, it deals with all different types of debtors or creditors, different types of collateral, as long as they are movable, tangible and intangible assets, with few exceptions. The main exception is intermediated securities and financial contract collateral. All other tangible or intangible movable assets are covered by the law, and therefore this type of law essentially enhances the certainty of the interests acquired by borrowers and lenders in the context of a loan or credit agreement, which includes a security agreement. So functional and comprehensive. There is a third characteristic, which is called a unitary approach. That is, instead of using the different terminology, transfer of title for security purposes, security interest, pledge, a mortgage of movables, assignment of receivables, fiduciary transfers, retention of title. The model law uses one term, security interest. Of course, it would be possible to use more than one term, but again, this would make the law more complicated and less transparent. And transparency for secure transactions has economic consequences. So this is why the model law follows the unitary approach. In terms of the top types of topics that the model law deals, the model law follows a logical order. That is, it deals first with the creation of a security interest, then with third-party effectiveness of a security interest. So it splits the effectiveness between the parties from effectiveness against third parties. Why does the model law do that? First, in order to facilitate the creation of a security interest and make it as simple, quick, and inexpensive as possible. So the creation essentially is subject to a simple agreement between the person that grants the security interest and the person in favor of whom the security interest is granted, the secured creditor. Third-party effectiveness, the effectiveness against third parties, is subject to different rules. The main third-party effectiveness method is registration in a general security interest registry. This kind of registration is different than real estate registration. That is, it doesn't create the security interest, it makes it effective against third parties. And what we register is not the whole document of the transaction, but just a notice about the transaction. The indexing and the searching in the registry is done by the name of the debtor who grants the security interest, not by the identification of the asset, as it is done in real estate registries or in intellectual property or similar registries. So much about third-party effectiveness. And there are other third-party effectiveness methods like possession for tangible assets or for negotiable instruments and negotiable documents, and also for bank accounts on non-intermediated securities, stocks and bonds, which are held by the issuer, security interest in those types of assets is made effective by control, by a control agreement between the borrower, the lender, and the third party, the bank in the bank account, or the issuer in the case of securities, which is involved in this transaction. The other main characteristic of the model law is that it has a complete set of priority rules. So it deals with all possible priority conflicts and provides certainty and predictability to lenders and borrowers. What will happen if there is a conflict of priority? Who will come first and who will come second? If everything goes well, this set of priority rules simply has a beneficial impact on the availability and the cost of credit, because a creditor who knows what his position, their position will be in the case of default, will be inclined to give more credit at better interest rates and with longer repayment periods. But if something goes wrong, priority is important because not all of the creditors may be paid out of the value of the collateral. So if something if all is well, a good set of priority rules has a beneficial impact on the availability and the cost of credit. If, however, there is default and insolvency in particular, a good set of priority rules is even more important because it minimizes the risk of default and insolvency, as the debtor, the lender, will be able to repossess the collateral, sell it, and pay the secured obligation. So this essentially is the key characteristics of the model law. I would highlight perhaps also the conflict of laws rules of the model law. The model law includes a complete set of rules that provide the law applicable to security interests in different types of collateral. tangible assets, the law of the location of the asset, intangible assets, receivables, the law of the borrower, the debtor of the receivable, and for bank accounts, intellectual property, and non-intermediated securities, there are different applicable law rules. The model law comes also with a guide to enactment, which explains an article by article commentary, and the treatment of security interest in the case of insolvency is referred to the recommendations of the UNCITRAL Legislative Guide on Insolvency Law and the UNCITRAL Legislative Guide on Secure Transactions. So with all these texts, the model law provides a complete set of provisions that deal with security interests, how they are created, how they can be made effective against their parties, what is their priority, how is enforcement organized, enforcement, judicial and extrajudicial enforcement, with due protection for borrowers and other creditors, applicable law provisions, and the treatment of security interests in the case of insolvency. So with that, I would just add that the treatment of small and medium-sized enterprises is that is foreseen in the draft guide on access to credit, foresees also a special treatment of small and medium-sized enterprises in the case of enforcement. So in the case of enforcement, perhaps in particular micro enterprises should be accorded protection like consumers. And that is the only situation in which a different treatment of small micro enterprises or small enterprises is foreseen in this kind of legislation. And with that, I will conclude my remarks on the model law on secure transactions. I didn't address fintech because I understand that there will be, Monica mentioned something, and there will be some later presentation on fintech, but also because fintech raises regulatory law issues that go beyond the scope or the mandate of the work of UNCITRAL. So with that, I will conclude my presentation, and I will be prepared to answer any question that might arise during the discussion. Thank you very much.
Thank you very much, Spyros. That was really excellent, and again showing quite concretely how law reforms can be used in ways which are of benefit to MSMEs. I think we're going to now step away a little bit from the very detailed legal space and hand over to Vera Neugebauer, who is going to speak to digital platforms and how they can act as a gateway to financial services and credit for MSMEs. So I'm pretty much just going to stop there and hand over to you, Vera. Thank you very much.
Thanks, Alex, and also big thanks to the Mandela Institute and UNCITRAL for organizing this event and for letting me present. So, and it was already quite interesting for me, to get this different perspective, also more from the legal space, because that's not really the background that I have. So I have a development economy background, and I'm working for the Center for Financial Regulation and Inclusion. So we specifically, look at how can the access to financial services for unserved or underserved segments of the population be improved. And what I will be sharing now is to look a bit more, outside of the regulatory space as well. What can the role of digital platforms be in order to, serve MSME financial needs, to step into that gap that we already discussed now, and what could be required for successful implementation. So when we're looking at MSMEs, it's obviously, quite different kinds of MSMEs that exist. And especially when we're looking at the micro enterprises, which are mostly informal, and also some of the small enterprises, which are not formally registered. These enterprises, as already mentioned, are often usually outside of the formal credit information system, formal credit access system. But some of them, and increasingly so, have a digital presence, right? So they are operating on digital platforms, on websites. They might have adopted digital payments. So these are kind of operating in the spheres of the digital economy, and that can open up new opportunities in terms of granting access to credit and improving the access to credit. And what I want to focus on today is then to look at the role of digital platforms at the subsegment of that digital presence. So with digital platforms, we, or the definition that we are using is that those are organizations that derive revenue from facilitating interactions between two or more distinct groups of users, right? So we often have these network dynamics with platforms where we have those ones that are supplying something through the platform, such as a service or good. And then we have this group that demands something through the platform, and the platform facilitates the interaction between these two groups. And in a study that we conducted in 2019 and 18, we could see, there are already a lot of digital platforms that operate across sub-Saharan Africa. So we looked at 8 African countries. And as you can see on the figure below, there really has been a tremendous increase in the number of digital platforms operating in those 8 African countries. And this obviously has been even further accelerated with the COVID-19 pandemic, which really has pushed interactions between those ones that supply a good or service and those ones that demand it into the digital space. And one thing, that we often, when we're talking to financial service providers, what are the issues around offering credit to MSMEs? And we already heard quite a bit, around this data and information gap, lack of collateral. One other issue that we also often hear is that MSMEs are not that well aggregated, right? They're not that well organized, especially if we're thinking more about those informal ones. And what digital platforms do is that they do bring together MSMEs in one key access point, which then also financial service providers can tap into in order to serve these segments. So for instance, just as you can hear, there are different types of multi-sided digital platforms that we see emerging where MSMEs do play a key role. So in the e-commerce space, we see it both in terms of from businesses to customers, something like Jumaya in Nigeria, where kind of 80% of the platform participants are MSMEs who really play this key supplier role. Another key platform type that we see emerging is business to business. So for instance, that, the smaller retailers source their stock either from large corporates like Unilever or others through the digital platforms, or even maybe from other MSMEs such as smallholder farmers. Then another sphere, and that's also, I think, where the cross-border element can become quite interesting, is when we're looking at logistics. So here it's really seeing, okay, MSMEs do require transport services and might source them through digital platforms by exchanging information and requesting these transport information from other transport MSMEs. So it's really like there are different sectors where digital platforms do play this increasingly important aggregation role of MSMEs. And quite a few of these platforms are not only operating within one country, they are operating in various countries and expanding the business model. And I think, we've heard a lot already about this gap, this financial service gap that we see. And it's also really something that we picked up in our work. So for instance, we did a study on MSME resilience quite recently in Egypt across the retail, the dairy, and the tomato value chain. And we could really see, you know, when we asked MSMEs, what are those key challenges that you face across these three value chains, it was cash flow challenges. So really that challenge of, you know, you want to purchase the inputs, but you haven't, you know, you don't really have the means to do so, maybe because your outputs weren't sold yet, or you haven't received the payments for them yet. There are often payment delays and other issues. And something, you know, that is also becoming increasingly relevant is the lack of resilience when a shock occurs. So obviously COVID-19 was a massive shock that really affected the business continuity of many MSMEs across the continent. So here also access to insurance, access to credit are really key cornerstones to enable MSMEs to operate and to withhold these shocks. And also with the climate change crisis on the horizon, you know, weather-related risks especially also affect agriculture MSMEs a lot, but also, you know, floods and other events can really affect other types of MSMEs as well. And here access to credit can really play this key role. And when we're looking at those digital platforms that I mentioned earlier, you know, that we looked at in the 8 African countries, we can see that some of them are already offering financial services, especially in the payment space, which makes sense, right? Because we're talking about digitalizing the interaction between different user groups, and the flow of money is a key, you know, is a key thing happening in that space. So digitalizing it, I think, is quite a natural step for digital platforms. Quite a few of them are also offering insurance, but then when we're looking at credit and even asset savings, only few platforms actually have stepped into that space. But there is, or what we believe is that there is quite a big opportunity for digital platforms to step in here, because there are this key aggregation point. You know, they bring MSMEs together, and often MSMEs that operate within a similar value chain have similar credit characteristics, similar credit needs, and they also do have access to a lot of data about these MSMEs, because the key issue is often the credit scoring model and lack of access to credit information about these more informal enterprises, which are not really included in the more formalized credit information systems or credit bureau databases. And the digital platforms then can really leverage this, you know, these diverse and alternative data streams that they generate from their platform activity for the credit scoring in order to, you know, tap into the gap and offer more affordable credit to MSMEs, and also to offer credit to those MSMEs that usually couldn't really be served because of lack of collateral. There's just a better understanding of what is going on within this enterprise. And when we're looking at, you know, what can platforms but also MSMEs benefit from this by incorporating, you know, digital credit into the platform. So as I said, one key thing is making it more affordable, making it more accessible. And it can really then enable MSMEs to better manage their risk. And then for the platform, it also means, you know, MSMEs might also be able to increase the usage of the platform. So if they are the ones that are actually purchasing something on the marketplace or platform, if they now get access to credit so they can continue making purchases on the platform despite having cash flow challenges, then that can really go a long way for both, you know, ensuring the platform has a stable business model, but also for ensuring that the MSMEs are more resilient against the shocks. And another one that we see is also that, going away from the demand side to the supply side, a lot of these platforms do rely on MSMEs as key suppliers. So if they do enable access to credit for users of the platform, it can really enable MSMEs to be more resilient and to have a more, to be more stable suppliers to that platform. So there's really quite a bit to gain, I think, for both digital platforms and MSMEs if financial services, and particularly credit, does get integrated into the existing product offering of digital platforms. And what needs to happen to enable this? I think one big first step is to really understand the needs of users in terms of financial services and to segment them appropriately. And I know, obviously from the legal background and trade background, this is a bit of a different perspective, but I think trying to understand, for instance, informal cross-border traders, how do they really look like? What are their activities? In which value chains do they operate? What are those key barriers that they face in terms of formalization? Why do they maybe rather go through very high risks, such as crossing a river instead of taking the formal border crossing? Probably because, formalizing themselves is just too costly. Taxation is too costly. All these different taxes and so on, it just doesn't make sense for them from a business perspective. So I think really understanding them more and also seeing, if we're looking at credit, what are their needs in terms of credit, can really go a long way. The other one is that platforms, if they're not offering a financial service yet, they need to partner with financial service providers or obtain themselves a license in order to offer financial services. So really ensuring there's clear regulatory certainty for them around partnerships, around data sharing, consumer protection, and these aspects. And also in our experience when working with financial service providers is that the regulation can actually have quite good provisions in terms of, enabling innovation. But financial service providers are often quite reluctant to take any risks, right? In terms of, they're rather sticking to what they're already doing and feeling, safe and, okay, I'm complying with the regulation. So in order to enable innovation also in the credit space, it's important that regulators really make sure that financial service providers do feel comfortable to step into innovation spaces that have been created in the regulatory frameworks. That can be done through, detailed guidance documents, through really having open communication channels and workshops with financial service providers to bring them on board with the implications. And to really also allow space for piloting, space for innovating and experimenting with new business models is something very important. So I think just to round it up, we can just see that the use of digital platforms in value chains and by SMEs is only expected to grow because it's more and more shift towards the use of digital tools and marketplaces to access goods and services. And to enable quite a robust digital MSME lending environment, there are different elements to look at. So one is, and it was already talked about quite a bit, the formalization and digitalization of MSMEs. And a key point here is also around the legal identities of MSMEs. So if they are, and this is now beyond platforms, but it can be really important that MSMEs are able to to provide identity information data to financial service providers. Then the other one is around credit information sharing, and also what is about credit information sharing across borders? What are some, how can different data holders collaborate with each other in order to fill that gap, those data gaps that exist in the MSME lending space? And then, as I already touched on, how can new lending models, such as, for instance, what I touched on today around digital platforms offering credit, really be enabled and be promoted in the regulatory environment, while also the risks emerging from these models, such as risks related to consumer protection, cybersecurity risks, competition risks, how can they also be controlled and managed and mitigated by the regulators and the regulatory framework without stifling innovation. So I think just to round it up, and I think there's lots more to explore around use of technology in MSME lending. Digital platforms is just one angle one can look at, but it's just really key to understand what is going on the ground. How can MSMEs be segmented? What are new business models emerging, and how can they be fit into these larger, trade agreement debates and considerations? And how can an environment be created where MSMEs are protected, but also gain access to the services they need, while financial service providers are also put in a position to feel comfortable to offer financial services to MSMEs and to enable their growth and development. Thanks a lot.
Thank you very much, Vera. That was really, really, really excellent, and I think speaks to some different perspectives that we didn't perhaps get earlier from the lawyers, and I think that sort of brings together why this sort of event is so important, right? Because we started off discussing the opportunities offered by the AfCFTA. Kennedy sketched those out for us quite nicely. We ended here with the possibility offered by technological innovation and the opportunities that come with that. And I think those two things together sort of point to where the lawyers fit in, right? And it's to make sure that we use the law as a tool that takes advantage of those opportunities as best possible, and that we approach our task with those ideas in mind, so that we really can get the most out of technological innovation and the opportunities offered by regional integration and so forth. So we don't have much time left at the moment. So I think what I'm going to do is I'm going to allow for 2 questions if possible. And then we will wrap things up, but do feel free to email us at the Mandela Institute if you'd like to carry on the conversation. But yes, I see a hand there from, I think it's Tama Dipao. Tama, I think you're muted. Tama, are you there? There we go. Tama? I don't think we can hear Tama. Includes from the panelists. Okay. If that's the case, maybe we've exhausted our audience a little bit with. Oh wait, there's a hand from Spiros. Spiros, please.
Thank you very much, Alex, and thank you again for inviting me to this excellent event. I very much enjoyed all presentations. I didn't refer in my initial presentation to digital assets, that is security interest in digital assets. This is an interesting development that should also be taken into account, and I will simply mention the recent amendments to the Uniform Commercial Code in the United States, 500-page study of the Law Commission of England and Wales, principles on taking security in digital assets by the European Law Institute, which probably is a prelude to European Union legislation on the topic, and the principles that are being prepared by UNIDRA on digital assets and in private law, which deal with transfer of digital assets, security interest in digital assets, the holding of digital assets. So these are interesting developments which everybody interested should perhaps follow. And I am among those who suggested the preparation of a study and the holding of a conference on security interest in digital assets, with the question also whether a uniform law should be prepared, or perhaps the model law of UNCITRAL on secure transactions should be updated to address security interest in digital assets. I leave it at that. I just wanted to mention by way of information for those interested in digital asset financing. Thank you.
Thanks, Spiros. Appreciate that. I see another hand there from Stanley. Stanley?
Thanks, Alex. Can you hear me?
Yeah.
Am I? Okay. It's more of a thank you, really, Alex. This is a tremendous session. I've attended one of these sessions before, but this is quite informative. In particular, the research that Vera you put together. I think perhaps that's where we ought to start focusing on practical solutions rather than thinking primarily about the problems per se. In particular, I think in your forthcoming sessions, I'd like to perhaps see a bit more what we're trying to do on the regulatory space, because it's well and good saying that we need to make credit available to SMEs and all that good stuff, but we have to look at what are the main drivers behind banks not be able to offer credit to the SMEs. And one area that people don't talk too much about is the regulatory space. For example, the impact of Basel III. The introduction of leverage ratio, for example, is a problem, and it's going to drive a lot of the financials away from the trade financing space. Just a suggestion. Thank you.
Great. Thanks, Danny. That that adds another whole puzzle piece for us to consider there. As Spiros mentioned earlier, the regulatory side sort of falls outside of the remit of UNCITRAL, but that's certainly something we can take up in a later webinar, conceivably. We have done some webinars on the regulatory side before, but I think it's something that we should very much look into and take up a bit further, because there are many interesting questions related to that topic in that area. So thank you very much for that suggestion. I think we may well take you up on it. Okay, I'm going to try again with Tsama, and then after that, I think we'll wrap up. Tsama? Tsama, we can't hear you. Are you there? Okay. Tsama's put a question in the chat, which says, are there any policy law recommendations to ensure that women-owned MSMEs are not left behind, overlooked in accessing finance, and gender equality is fostered under the AfCFTA? I don't know if any of our speakers want to take that. Kennedy, would you like to take that perhaps? Or Monica?
I don't want to take the floor from Kennedy. Actually, I'm not an expert on the AfCFTA, so this is a part of the question that I leave to him. But just would like to, in fact, inform that in the draft guide that that UNCITRAL is preparing on access to credit, there are 2 recommendations for the government, 2 legislative recommendations that there should be no discrimination in access to credit based on any ground. And that is the general recommendation. And then there is a second recommendation that there should be no discrimination on access to credit based on sex and gender, and so that women should not be left behind. At this stage, the recommendations have not yet been approved by the working group. They are just a draft, and they will be discussed in next February. But one recommendation that is, in fact, legislative recommendation that is in one of our texts concerns business registration. And in the UNCITRAL legislative guide on key principles of a business registry, there is a recommendation that specifically reads that no women should be left behind in terms of business registry, and they should not be discriminated in the use and establishment of a business because they are women. So just a very quick, and then I'll leave the floor to the others. Sorry.
No, that's a very helpful intervention. Thank you, Monica. I see Vera is typing something there. And Kennedy, sorry, I was throwing the ball in your direction earlier, and then
yeah, sure,
yeah,
thanks.
didn't get to you. Please go.
Well, as I had mentioned, but quite briefly earlier on, there is certainly already a protocol on women in use and trade that is specifically meant to address the constraints and some of the issues that women traders and youth have been facing, and this is under the AfCFTA. And in particular, also, it will address issues such as, of course, access to financing, which is one of the issues that, women in general face, or women in business. I think for me, this is quite notable because it's not only an aspiration, but it's a protocol, which means that, it's an instrument that will be sort of like driving much of the work around the AfCFTA. So it is our hope that with this sort of development and already the conversations that are happening around it, just last month, the AfCFTA hosted a conference on women in trade in Tanzania. And a lot of these issues were around how they implement this very protocol, and to take it in silos and to really conceptualize how implementation could look, for me, is a great step forward, looking at the kind of ways or approaches in which organizations usually take around the issue of women in business and how to support them.
Great. Thank you very much, Kennedy. I think that's a good answer to the question. And I think I should also just raise Vera's point in the comments, which is about understanding why women face challenges and trying to get better data to try and diagnose the problem prior to making any policy and legal recommendations. I think that's also something that requires a bit of focus. So I think that probably spans the diagnosis, the policy recommendations, and to a degree as well, the sort of legal possibilities there. So Tsana, I hope that answers your question. And with that, I think let's bring this to a close. Just a couple of final notes. First, I saw we had Yan Ying Li joining us earlier. I think she's left now, but she'll be one of our speakers at the next webinar next week. So please do keep a watch out. We'll send out some communications about how to register for that one, which will be speaking about UNCITRAL's work in the insolvency arena in sort of a similar context. So do keep your eyes peeled for that one. And then finally, just to thank everyone for attending, especially to our speakers. Thank you for taking the time and speaking to us today. I think we had a really good set of presentations that show why these sorts of events are necessary, and show where there's room for cooperation amongst or across disciplinary boundaries and in different sort of what are often silos. So so thank you all very much, and we hope to see you next week. Take care, everyone.
Thank you, Alex. You too. Bye.
Thank you, Alex.
Thank you.
Bye.